Inflation at the wholesale level rose 0.5%. That was more than the 0.3% rise anticipated. Let's get to that market reaction now with Joe Tigay of Equity Armor Investments. Joe, what do you think?
Yes, we had inflation coming in a little bit worse than expected, and it seems like the market's putting less weight on the inflation data points coming out. Earlier this year, last year, we saw big moves off of inflation data points. Not so much this time around, even though it was worse than expected. We did get a surprising move for me, looking at the 10-year yield. That actually is coming lower on more inflationary numbers. So that's very interesting. To me, it is coming off of the Fed speak saying maybe they don't need to do as much. Last week, you might have seen the bottoming in bonds, and we're starting to see a big bid come through. People are buying up the middle to back end of the curve, looking for these longer dated treasuries, locking in these 4.5% to 4.7% yields and just going to keep them for 10 years risk-free. So that's been the fascinating thing for me. And really, the beneficiaries off of that are some of the risk-on names, some of the worst performers in September and October when we saw that yield climbing. Things like the home builders, things like the regional banks are having a nice performance off of that falling in the 10-year yield.
Thank you very much, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.